Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago on June 17th, bringing you some commentary in the energy market. So let's get started. Crude prices, pretty wild ride here today, although we're currently trading about unchanged on that July contract. We're sitting right around 59.95. We've been as high as 61.38 and as low as 58.85. So we've seen a pretty good size range here today, just a little over $2.50. We're back to about unchanged on the day, although most of the session here, we've really seen an early start here was firmer, pulled back, and we're kind of been coming back up here as we're coming into the afternoon. Taking a look at the nat gas, we're off about 4 cents there, so just a little bit weaker tone there. Complex is a bit mixed. RBOB's off about 2.5 cents, while the heat's up about 2.25 cents. And a lot of the news that's kind of affecting the market here today, we've had a lot of things coming out here today. EIA data for one. We saw a draw of about 2.7 million barrels in the stockpiles. So, looking at that, this is the 7th consecutive weekly drawdowns that we've seen in crude oil. So, something I've talked about in a lot of these posts here. I think we're starting to see a little bit of the demand side kick in, and that's been evidenced here by the drawdown. But also take a look at those refinery capacity utilization numbers here. I think that's what really is telling the story here. Looking at it here in this latest report, running at about just over 93% versus a year ago at around 87.1%. So we're seeing strong demand for oil at the refinery level. And I think that's, again, here when you take a look at the RBOB, we've seen very strong demand there on the RBOB side of things. Now, we did see a slight build in the stockpiles, and I think in the RBOB stockpiles, and I think that's what put crude under just a touch of pressure here early on. We saw a build there of about 500,000 barrels. So not a huge build, but nonetheless here still a little bit bigger build there. So I think that's kind of weighing on traders a little bit, but yet I still think demand remains strong, and I still remain cautiously bullish on oil. Now, other things affecting the market here today, FOMC minutes being released, so we're looking at some commentary there. We're seeing the dollar weaker here today, and with the dollar being weaker here, that's generally supportive here to most commodities and crude oil as well. You take a look at some data that was coming out of Japan here for the month of May. We saw their imports for oil up nearly 8%, so really suggesting strong demand there. Really seems to be, I think, kind of an overall risk-on type of vibe going on in the markets today. And so really just kind of giving commodities in general a bit of a lift here. Now, I think when you take a look at the oil market, and you look at the overall range and how we're trading here, although we did make those nice highs earlier on, we kind of backed off, explored the downside of the market, but have really come back. To me, I think what you're seeing is a little bit of a washout on both sides of the market, but I still like that long side of the market. So, my suggestion is to be cautiously bullish on the market here. If you're looking for some ideas and some strategies to play that, feel free to shoot me an email and give me a call. We can get into more detail. And options on futures may involve substantial risk and may not be suitable for all investors.